Today on Go Ahead Ask, navigating the business of investing in notes inside of self-directed IRAs and individual 401k plans. What does that mean? What are the benefits of buying notes inside of a retirement account? How can you get started? Our guest describes it as dancing between property and paper. Let's unravel that mystery today on Go Ahead Ask.
Building wealth in real estate? Let the Exeter Group take the mystery out of how it's done on Go Ahead Ask.
Welcome to the Go Ahead Ask podcast by the Exeter Group, where we unravel the mystery of investment real estate. Our objective is to provide investors with quality information so that you can make better informed investment decisions. I'm your host today, Bill Exeter, and I'm Chief Executive Officer of Exeter Trust Company. The Exeter Group of Companies includes Exeter 1031 Exchange Services, which serves as a qualified intermediary for all types of 1031 exchanges in all 50 states. And Exeter Trust Company acts as an IRA custodian for self-directed IRAs and individual 401ks, trustee for title holding trust or land trusts, escrow agent for specialty holding escrows, and general custody services. Here at Go Ahead Ask, we encourage questions and topics. So please send your requests, send your topics, send your questions to ask@exeterco.com, or you can call us at area code 619-239-3091. Again, that is 619-239-3091. And if you like our podcast or love the podcast, go ahead, like it, subscribe to it, share it, and comment on it. We would appreciate that. Today's podcast is entitled Unraveling the Mystery of Investing in Notes Inside of Self-Directed IRAs and Individual 401k Plans. You've probably heard that retirement account owners have become increasingly frustrated with Wall Street. Real estate investors want to do what they do best and what they know best, and that is invest in real estate. And yet, so many IRA custodians only allow stocks and bonds and mutual funds as investment options. Investors want choices, they want options, especially real estate investors. There are certain investment niches that many investors have never heard of. One of those investment niches is investing in notes, usually secured by real estate, but not always, often referred to as buying paper. These investments can be made both inside or outside of a self-directed IRA or an individual 401k plan. And we're going to unravel that mystery today. And I'm really excited today to have a special guest and a good friend of mine on Go Ahead Ask. And she's going to help us unravel this mystery of investing in notes or paper. So I'd like to introduce Dawn Rickabaugh, who's the owner of NoteQueen.com. And Dawn is the owner of not only NoteQueen.com, I guess that's the website, Dawn, but the company is NQ Capital. It's a small family-oriented or family-operated investment company that buys both property and paper. She buys seller-financed notes across the country and helps others get started investing in notes. She also buys and sells real estate in Carson City, Nevada, really near the Reno-Tahoe area, and consults in real estate transactions that offer investor financing. And just to reinforce that, the website is NoteQueen.com. Dawn, welcome to the podcast.
Thank you so much, Bill. It's a real pleasure and honor to be here. So thank you.
And to get started, why don't you tell us a little bit about yourself and your passions?
Well, thank you. I'm a lot older than I used to be. Remember when we first met? I was a little baby note queen back in there in those days.
I probably had more hair back then too.
But actually, I went to school and I was graduated with my bachelor's in nursing. So I was an RN in Huntington Memorial Hospital. I worked in the ER, the ICU. That's where my passion was at the time. Wow, did I love it. I had 3 babies right in a row, and they became my passion as much as anything. And that worked out really well. I'm just being a nurse, being a mom, That's pretty much all you need. Uh, but then, sometime in the mid '90s, I started being a kind of a weekend warrior. You know, you go to those workshops and go, I wonder if I could learn how to, as much as I love my job, I wonder if I could learn how to not trade my hours for dollars. I always thought you should be able to figure out how to be an investor, whether it's options. You know, I went to all sorts of classes, but the thing that really captured my imagination was the note business, what was called the note business, which, uh, I mean, of recent years, it's taken on kind of a new meaning, but historically, through the decades, the note business referred to seller carry paper. So when people sold their property on owner financing and then had that payment stream coming in, and then if they wanted to sell that, then there was a group of note buyers. The secondary market, just kind of like Fannie and Freddie are the secondary market for institutional paper a lot of times, or is that, yeah. So basically, there's a secondary market for private paper as well. And so that's the market that just captured my imagination. And so in 2004, my goodness, I just quit my nursing job. Instead of just playing at it and poking at it, I said, I'm going to go for broke. And yeah, I did. I did a little bit of all of that, stumbling my way forward into entrepreneurship. But I've been building a portfolio since 2009 through current. Instead of just trying to brokering, wholesaling notes and things like that, it's like, no, you need to become an investor. That's when you really learn the business. So I just got my financial partners and just started building a portfolio. And so that's what I've been doing full time. So cash flow from rentals, short-term rentals, a few loans, owner carry paper. So that anything I can use my knowledge of the discounted market for notes to put together a multiplicity of ways to create cash flow and make a deal work for everybody. So I'm super passionate about it because one of my taglines is creating financial solutions just one mom and pop to another, because I'm not really a big fan of institutional anything. So that's just sort of my niche. And so here I am.
Terrific. Well, one of the things I've noticed when I talk to investors and I mention buying paper is this glossy-eyed look.
Right.
And so, especially when you take that to the next level and say you can also do it inside self-directed IRAs and individual 401k plans, they really have that lost look. So, can you kind of, in layman's terms, describe what buying paper might mean to the average Joe Blow as an investor?
Yeah, I would love to simplify it because one of my passions is to make this conversation accessible to the average person, because if it seems too complicated, then nobody comes to play, right? So we need more people that can play in this space to create solutions and transactions that don't rely on bank financing 100%. So everyone knows about getting a loan from a bank, right? So that bank, if you got a loan to buy your house, that's paper. That's institutional paper because you owe the bank. And that bank will take that paper and usually sell it off to somebody else on the secondary market for notes, on the secondary paper market. So let's say instead of me I'm just going to use an example of how we bought the house that I'm sitting in right now. It started as a rental when we moved out of Southern California. I just cannot stomach the process of going through the application process and letting someone else tell me if I get the money or not. So I never ever do that process. So when I buy property, it's always owner financing or cash, and if I need to, if I get a really, really good price. So let's say, our landlord owned this property free and clear. Now, he wanted us to go get a bank loan, but I wouldn't do that. And so I said, why don't you be the bank for us? And so eventually, in getting their accountants and their attorneys, they figured out that I wasn't asking them to do a scammy thing. They go, "Oh, it's a real thing." And so anyway, so the sellers, the landlord became our bank. So instead of me paying Bank of America, Chase, whatever it is, I paid the previous owner, my landlord. They became the note holders. So they switched from owning real property to owning chattel or paper. So they went from property to paper, but they're still getting cash flow secured by this same property. It's just that I don't call them when something's going wrong. We have to take care of that ourselves. We pay our own taxes, our own insurance. The only difference with owner financing, with that guy who'd never done it before in his life, the landlord, is that instead of being the owner of the property, he became the beneficiary on the deed of trust. And if I would have got a bank loan, a bank would have been the beneficiary of the deed of trust. That's the only difference, is the name of the beneficiary of the deed of trust. So then that represented a cash flow to him. So that's how owner carry paper is created, is an owner will become the lender on their own property that they own. And either they keep that payment stream or they sell it off. So after I'd been paying a year or two, he could have sold that note off in the secondary market to some other investor who says, look, I'm looking for, so the face rate on the note, tell me if I'm getting too deep here. But I to pay the price he wanted for the property, I only wanted to pay 5%. That's the most I would pay. But so if he had an investor, like one of these people on your call for their self-directed IRA that wants something really safe, really secure, and they're willing to take 7 or 8% yield, so they offer the seller, the one who holds the note that used to be my landlord, they just say, I'll give you a small discount. Okay, you're owed 250, I'll pay you 225. And then based on the discount, that that investor in their self-directed gets that nice 7-8% yield, and the note seller gets to, instead of having 1,500 a month, they get to have 225,000 all at once. So was that simple enough, or did I accidentally make it too complicated?
No, I think that works. And that kind of gets to the next question, which you kind of addressed as well. But you probably get a lot of newbies when you're first talking to them and trying to help them through what is this and getting started. And they're probably, their first question is, well, why should I do this? And you kind of talked about yield, but any other benefits that they should be aware of as to why they'd want to consider a paper versus actually buying real estate?
Well, do you like being a landlord? I mean, do you like getting the call at midnight? There's the toilet's overrunning, or it's a big job to be a landlord, and not everybody wants that in a self-directed climate, which I think we're sort of aiming this toward that conversation. You don't want the interest to be taxable, right? Or you want it tax deferred. So you can buy an owner carry note like I just described a minute ago, or you can make a loan, and that's still the paper business, but instead we call it private lending. But it's still the note business because you have a note and deed of trust. So whether you originate on the primary market or you buy somebody else's note that they originated, it's all the same thing. You're secured by a note and a deed of trust. And what's interesting to me is even hard money lenders, and this may not be true anymore, but like in the beginning of my little note queen career, I would have to educate hard money lenders. I say, why aren't you buying other people's notes? This owner carry paper. Oh no, we only originate. And they acted like it was such a different product, but it's not. But think about so the people, before I get crazy here, most people go, I know about hard money. I can borrow money from a bank, or I can borrow money from a friend, or I could go to a hard money lender and get, get my cash. And so everyone knows that product. So to be the lender means you get that cash flow without any of the headache and the liability of owning property. Somebody gets hurt, who's going to get sued? You're not, as the lender, you're not going to get sued. Somebody trips and falls, there's a tenant complaint, blah, blah, blah. So it's actually a much simpler position if you just learn a few core fundamentals for underwriting. So, but most people know property and know how to go, oh, I'll just be the bank on that own property. That's usually low-hanging fruit for people, is to carry paper on property they already own, or to just lend money to, say, someone who's flipping a property, and just wants to borrow money for the next 6, 12 to 18 months. That's the easiest way for people to understand it. But even hard money lenders, which is what I started with, usually if you've got a portfolio, you're a hard money lender. Let's say you keep $1 million in your piggy bank, or 5 million, or whatever it is, right? You usually make the origination, you make the loan, and that's originating the loan. That's the primary mortgage market. And then later they find the mom and pop investor, like some of your self-directed people, and then they assign that note to someone else. So that's the secondary market. You're taking the note by assignment instead of originating it. So most hard money brokers do this already, but they don't call it the note business. It's just a different way of, it's different nomenclature, but the concepts are very simple and very similar.
And you made a good point about interest income on the note. And that's one of the things I find a lot of folks don't really think about. They want to buy real estate in their self-directed IRA, especially if it's a traditional IRA. What they don't realize is they buy real estate, they don't own it. The IRA owns it, not them individually. So they can't depreciate the property. They certainly have all the risks of property management that you mentioned. And then at the back end, when they start taking money out at retirement, it's not capital gain income. It actually becomes ordinary income. So they've converted a capital asset that could be a capital gain if it was outside the IRA into an IRA investment that now creates ordinary income. Where if you do a note, it's always ordinary income no matter what. So it makes more sense, I think, to do that inside the IRA.
Oh yeah, all day long I would own, the most favorable tax treatment we get is for real estate as investors. So keep that on the outside and do all the paper on the inside. The only exception would be if hey, I'm going to buy these 10 houses at 50,000 each, and I'm going to sell them on owner carry at 100 each, and so you're really turning it into paper anyway on purpose. So some people do that. That, like I said, the easiest way for people to get into the note business is to offer seller financing or owner financing on something they already own. Then voila, you're in the note business. And that's not rocket science right there. It's very, very simple, very straightforward transaction.
And we're going to take a quick short break. This episode is sponsored by Exeter Trust Company. Did you know that all individual retirement accounts are self-directed IRAs? It's because you choose where to put them. You choose whether to put your self-directed IRA at a bank or at a securities or brokerage firm or a life insurance company. So that makes it self-directed. But did you also know that all IRA custodians are not created equal? Most IRA custodians, like the banks, the securities firms, and the life insurance companies, limit you to publicly traded investments such as stocks and bonds and mutual funds. But some IRA custodians, like Exeter Trust Company, allow investors to invest their IRA funds in other alternative assets such as real estate. Investors can acquire real estate, mortgages, deeds of trust, or tax lien certificates inside the IRA as an investment inside the IRA. To learn more, call Exeter Trust Company at area code 307-222-8750 or visit them on the internet at exetertrustcompany.net. And we're back with Dawn Rickabaugh with NoteQueen.com, and we're discussing investing in notes inside of self-directed IRAs and individual 401k plans. And we've been talking about why you'd want to do that and the benefits, et cetera. And so I thought we'd go deeper into the weeds. So, there's lots of types of paper and different investing strategies. You've mentioned kind of originating the note and then buying it from somebody on a discount in kind of the secondary market. But you can get even more creative with that. And I know you get involved with that quite a bit. Maybe can you go into some of the details there as to different options you might have to get creative?
Okay, great. I would love to. And is this in the context? Am I still thinking of my self-directed IRA person?
Could be IRA or it could be outside the IRA as well, because I think
Because
it's a great strategy.
the 1031 angle is one I want to address at some point. So, but
Sure.
your 1031 person, a transaction that I did early on when I was still in Southern California. This was right in my own little town, and I'd been writing for the local paper, so that's how somebody knew who I was. And I just got brought into the deal. They were trying to do a 1031. It was a commercial building downtown, and but the only offer they got at the price that they wanted was asking for owner carry. They wanted to put 30% down and have the owner carry the rest, amortized over, say, 20 years, but due in 5, something like that. And they're going, well, no bueno. Okay, so if they didn't want to exchange, it still would have been good, because then they can go, well, this is a tax deferred, the installment sale, IRC 453, allows you to defer your capital gains. So if they would have not wanted a different property, that would have been fine to get an owner carry, and then that would have been their income. They deferred the gain, but they already had their other property identified. So we had a problem. They'd been on the market a while, so they finally got their price, but now it's an owner carry offer, and they're going, what do we do? So then they go, oh, there's this girl who writes in the paper, so let's call her. So the real estate agent and I got together, and we basically said, here's what we're going to do. You're going to sell the property. That down payment goes into the exchange qualified intermediary. And then the next day we're going to sell the note. And then because we could reverse engineer the numbers, it was for a very small discount. So they got a very small discount, and they sold the note. So therefore they carried paper to accept the offer and get it in escrow and close it. And then they sold the note and then had all their money to go exchange into the other property. And the bonus for this is that the real estate agent, her reward for being very open-minded about working with me and being willing to stretch and learn a new trick, is that she got the 5% based on a higher price than you could have got for cash. Plus, I asked her, I said, Chris, what's your own IRA doing? And she goes, I think I might have made 1% on our money market account, or what? And she goes, I go, how would you like to, and I don't know if this still seems like a conflict of interest, but how would you like to make a minimum 8% return, maximum of 12% return secured by a property that you know all day long what the value is? And she goes, yeah. So she or her family, so she was the real estate agent that got paid 5% on the inflated owner carry price. Then she bought the note at a discount and went from making 1% on her retirement funds to making 8% if it went full term, right? If notes pay off early and you've bought it at a discount, that's a lot of times the digits go double digits easily on the same collateral, on the same deal. So so if you're trying to do a 1031 and you get an owner carry offer, don't be dismayed. There's a way to create the note and then sell it right away. So that's for the people who are thinking of selling, right? So, but you have to reverse engineer the note so that it sells at a minimum discount, because if you do it wrong, you might need to sell it at 50 cents on the dollar to liquidate, and that doesn't work.
That would be painful.
Very painful, and people don't realize it. So that's why, banks have underwriting departments, and the mom and pop owner person who's willing to offer financing, owner will carry on their property, doesn't have an underwriting department. And so that's why I have my consulting product, is to be the underwriting department, saying, if you're going to carry paper, here's your how to have realistic expectations, what the secondary note market will pay for that note, so that you have a note worth holding or selling. Because the last thing you want is, oh, I'm never planning to sell this note, so that's fine. And then you die, and then your kids are left with something they can only sell for 50 cents or not at all because you made some big mistake with the paperwork or something. So, but most people, let's just talk about your average IRA person that has a couple hundred grand sitting there. And so some of these strategies, it's called partials, sometimes hypothecation, but let's just call it a partial note purchase. So I'm just going to tell, a story of where, let's say, here's a note that I put in my IRA just last year. So this was a little bit hairy, but I don't think I'll bring that part into it. The basics are the property is worth $500,000. The note had a balance of $400,000, and because of some hair on it, meaning it wasn't clean as a whistle, like for the institutional note buyers, we got it for, let's say, $160,000. So I bought a $400,000 note for $160,000 on a property securing that note worth $500,000. Now, if it went to court and things got messy, I'm willing to take that risk. So this isn't average. This is not average, okay? But it does happen, which is really nice, right? So that's $3,000 a month coming in. Well, I only had $50,000 that I wanted to deploy. So basically what I did is I put down, so we bought it for 160. I put down 50. So I borrowed, or I sold a front end partial. So basically, actually, this was my sister's self-directed IRA. So I said, look, I'll pay you 12%. And she gets $3,000 a month for the next 4 years, and that works out to 12%. Then after that, all of that money, $3,000 a month for the next 10 years or 12, I can't remember, maybe even 20, goes into my self-directed account. Now, $3,000 a month coming in, and I only put $50,000 out up front, is a really good deal for me. That works out to a 40% plus yield when you figure that out. And my sister's happy because she gets 12% and a very safe position. I don't get money until she's paid off. So if you feel comfortable, let's say you only had 10,000 to start with. You know how you can only start with what, 5,000 or 6,000 a year you can put in?
Right.
So let's say you can come across a deal where, you can buy an $80,000 note for $50,000, and you've got $10,000 to work with. So you go, So I'm going to buy the whole note. I'm going to put in $5,000 of my own money, and I'm going to bring in $45,000 from someone else's IRA, or it doesn't have to be qualified money. And they're going to bring in 45. I bring in 5. I've bought the note at a 14% yield, and I'm only paying them 8%. So, I mean, there's a lot of juice that comes. That's how you can turn $5,000 into $40,000 or more with relative ease. Now, maybe you're the one that goes, I don't really so much trust this note business. I want someone else to have the risk. So then you'll be the one that buys the front end of the note. That's called buying a front end partial. Or you're hypothecating, you're loaning money secured by a note that's secured by a property. So if you're really conservative and you don't want the risk, then you just bring in the little bit of money and make your 7, 8, 9%, and let somebody else take the back end of the note. Or if you can hold a little risk, but you only have a little bit of money, then does that make sense? Like, yes. That's a way for, even little bits of money in an IRA to go a long way. So
really anybody can get started. It's just a matter of putting your mind to it, working with the right people, the right team. And even if you're just starting an IRA, there's a way to do it.
Oh, absolutely. So like by the time I figured out what I was doing when I quit my nursing job and just, went full in, by the time I figured out that you don't need to spend a lot of money to learn the note business, I had already gone through all my own money. So I didn't have a lot of money. My first deals, I had no more than $5,000 to throw at any one deal. So I had to learn how to partner with other people, and then their lives were blessed, and I created passive income out of thin air, and so it worked really well. So.
And, I think a lot of people look at this like, okay, I could do a seller carryback note here. I could do a note there. Like you said, kind of after hours on weekends, armchair management, maybe per se, but you can turn this into a full blown note business. You're a perfect example that you've done it.
Yeah, I did it. I mean, I'm not a typical story nurses to notes, really. And I got a little brain damage along the way. But I wouldn't take it back. Anything that I did and I learned and that I went through. But it just depends. Not everybody. You have to figure out what you really love to do. What is your gift to the planet that only you can do? And if it's the no business, then go all in. But if you just need passive income so that you can do your other thing, do your art, do your community service, do help raise your grandkids. I don't know what it is. The best use of your time is what you're passionate about and what you're on the planet to do that no one else can do exactly the way you can. And so for me, the no business is a big part of it. And so it was my big passion, like figure out how to make these mom and pop solutions work outside of the banking system. And now it matters to me in a larger context. Then I go, okay, now I'm adding, because I know the note business inside and out, then I can just turn the crystal around. Now I'm going to play it from the other side of the coin, property paper. There's this dance between property and paper. So then it was easier for me to grow a property portfolio because I understand the note business. I already have my financial partners lined up. I know how to negotiate from a lot of different levels. Most people know how to take cash, convert it into real estate. And then if you offer owner financing, you're converting it into paper. Most people don't know that you can take that paper and turn it back into cash. But you can also go the opposite way. You can take the cash and buy the note first. And then sometimes if you foreclose or you get a deed in lieu, that turns into real estate, which you can sell for cash. So you should be able to go both ways around the circle, being very flexible, saying I can take cash and buy a note and be happy with that cash flow, or I can get my cash and buy a property and be happy with that cash flow. It's about cash flow, things that just keep showing up in our bank account, even when we're sleeping.
And it certainly gives you the ability to do a better job for your clients, your investors, even your own portfolio, because you can solve problems. So you're really a problem solver.
Yep. And when you get this discounted, the private discounted paper market, it'll blow your mind the ways that you can put the pieces together. So I mean, everyone says you can't do owner care, you can't build a portfolio, not in this area. Well, I guess I did it by accident. So it's not like I'm a high volume person. I'm a very just mom and pop boutique operator. Like I said, it's family operated business, and I do a few flips. Lots of times I carry paper out of it. Sometimes I don't. Sometimes I just want the cash money, a big chunk of change. It's kind of, you need it for things sometimes. So, but anyway, just leveraging and putting the pieces together with my financial partners. But always, I would suggest if you're a buyer, I always think of the seller as my lender. I always think of the seller as my lender. And when I'm selling a property, I like being the lender. And it's not because, this person wants owner financing because they're not a good borrower. I mean, I know a lot of people, especially in the early days when I met you, Bill. I was coming across tons and tons of people who had worked really hard their whole lives. They had a portfolio of rental properties, and then at some point they got too tired and weary They're weary landlords, but their whole plan was to carry paper, convert the real property into paper, so that they could get cash flow secured by property they already understood. So worst case scenario, they could take the property back, and they already knew all the warts and bumps of that property. If you buy a stock, and what are you going to do if the stock drops? What are you going to do? You can't do anything, you know? So most people can make 4, 5, 6, 7, 8% by putting in the work to understand. And if you want to be an armchair warrior, you have to get good at creating relationships. That's just it. So either it's your full-time job, or you create relationships. That's what you do.
Is that kind of the yield spread in today's market that the investors can expect, or what do you see out there in terms of yield?
If you want to be a hard money lender, depending on the area of the country that you're in, it's easy to get. Like in California, like let's say some of the prices, there's so much competition that I think one of the bigger lenders was lending at 6.5%. Right? That's really low. So to be competitive in certain markets, you have to be lending at no more than 7 or 8%. Whereas some areas on the East Coast, there's a guy named Ed that we talk all the time, and he's lending his money out at 14% all day long, day in, day out, 14%, 20-year notes, just to landlords who don't want to qualify for bank financing. So he's got 50% loan to value, 14%. He's doing great. He's happy. Why would he be a landlord when he can lend out his money to other landlords at 14%? None of the headache. Just cash.
That's a good problem to have.
Just cash the check. Yep.
And you mentioned that you had passions for helping people getting started in this industry. What advice would you give to the listeners who are just now looking at this as an idea, or maybe they're just now hearing about it? How would you help empower them to get started?
For some people, the easiest way to get started is start making a loan, because that's plentiful. It's simple. There's a lot of hard money lenders. There's a lot of investors, either landlords for long term or people flipping property for short term. So you just got to hook up with the people who have the deal flow already. So that's the easy way to go. The other easy way to go is to offer owner financing on a property you already own. So, and if you want a little help, I mean, I have so much content over the years that's just out there for free. But if people want my help, I do a little bit of consulting, and I just say, look, we want you over our shoulder on our team, and I just charge a little bit of money to just help people. So as a consulting product. Or if you want to go all in, you can, there's all sorts of people that are teaching master courses, and you can drop easily $10,000, $20,000, $50,000 on those people. And that's worth it if that's, what you're doing. But to me, my clients are I'm just selling this one property with owner financing. How do I do it? I don't want to sell the note now, but if I wanted to, I want to be positioned correctly, and I want my heirs and beneficiaries to be positioned well and not have a headache. So, besides just all the material and the monthly call that I hold for free, you'd have to sign up over at my website and get your name on the list. And then once a month, I email and say, hey, the call is at such and such a time. Here's the Zoom link, and you can participate in those free monthly calls. But if you want me on your time schedule, you just hire me on a one-on-one basis.
So you could kind of be their underwriting department, if you will. Yeah,
their underwriting department, or they can hire me thinking that I'm going to tell them one thing, and I say, you should not be doing this thing. So here's why you think you're doing the right thing, but I don't think you are. So I'm kind of in my old wise woman days now with the grayer hair. I just call it like I see it, I guess. So sometimes people think that they're doing what they should, and I go, no, I don't think you're doing. Based on what you need, where you're going, here's what I think you should do instead. So
I noticed that your underwriting department is no longer in the chair back there.
Well, I was afraid that the underwriting department would get needy and noisy right in the middle of something I'm trying to say.
Say, you out. That's awesome. Well, how can listeners get in touch with you when they need help?
Yes, go ahead and just go over to notequeen.com. Just sign up there or look for my podcast. I think we put it out on a podcast every month. Or my email is support@notequeen.com. And my cell is 775-291-2009. And it's best to call, leave a message, and then follow up with a text, because if I don't recognize it, yeah, so.
Perfect. Well, thank you everyone for listening to Go Ahead Ask today. Dawn, thank you so much for being on. That was a lot of great information, and hope you will get investors started down this path, because it's an exciting business to get into.
Yeah, it really is. Changed my life.
And for those who want to ask questions of us, of Dawn, or recommend some topics, etc., remember, we always encourage questions. So send your questions to ask@exeterco.com, or you can call us at area code 619-239-3091. If you like our podcast, please share it, subscribe to it, like it, or comment on it. Thank you again for participating. We'll see you next time.
Thank you for listening to Go Ahead Ask with the Exeter Group. Join us for our next episode when we further unravel the mysteries of real estate.